everybody. Happy Tuesday. Welcome to Tuesday Night Live. And we've got a special guest on tonight. Christy, how are you
tonight?
Is it
me?
Very good. Thank you. Yes, you're always special.
I'm the special guest tonight?
You're more than special, Jeff.
Thank you.
Yeah. So we do these lives every Tuesday night at 7 p.m. so that you can ask questions. So we encourage you to jump in on the conversation, ask questions, make comments down in the comment section, whether you're on Facebook, on YouTube, or on LinkedIn. You can comment on any of them, and they should pop up so we can put them on the screen. Now, just know that your name and your comment will be on the screen, so keep it family friendly here, okay, everybody?
I feel like you're talking to me just a little bit when you say that.
No, never, Jeff, never. You were unsupervised on 2 videos this week, and you did really, really good. So
thank you.
I'm very proud of you.
I was very proud of myself that I figured out how to do what I needed to do without the technical genius there.
That's right.
That one neighborhood, Christy, I think you've done insurance for us actually out in one of the neighborhoods. It was Timothy Lakes. They had 3 really nice ranch homes out there that were available. So Christy's even familiar with that neighborhood, Mark.
Yes. So tonight, Christy is on because we're going to deep dive into insurance. We might get into some stats later if we have time. One thing I do have to mention, I promised my daughter I would mention that this Friday night, they are having the variety show at Cane Bay Choir.
Very nice.
It's Abby's last choir hurrah because she got into Berkeley Middle College School over at Trident. So she's doing her last 2 years at Trident Tech. So come out and check out the Cane Bay Choir show. It's going to be a lot of fun. And I think doors open at 6:30. It starts at 7 o'clock.
So variety, does that mean they're doing more than just like chorus singing?
Yeah. Last year they had all kinds of stuff from rock and 80s and all kinds of stuff. It was really cool.
That looks fantastic. That's a beautiful choir.
Yeah. They do really, really well. They win all kinds of awards and everything else. I think it's like $10 to get in. So if you're in town, come check it out for sure. But Jeff, I think we should dive right into insurance. Everybody keeps asking insurance questions every week. And we have the expert on tonight. So I feel like we should just go ahead and dive right in. What do you think?
Yeah, and this comes from a place of, Mark and I always kind of want to work with people that we know, we like, we trust. And so Christy does insurance for both Mark and I. So she's our insurance broker. I just realized the other day, Christy, I think I have 8 things with you.
Yeah, I was looking at that. You keep buying things, and the insurance companies love you.
Yeah, like I've got my parents, their car and their house and my house, and then now 5 vehicles with you. So
you've got a problem, Jeffrey.
I'm done. Like 5 vehicles is enough. And I sold my rental property. Actually, I had more with you then because I had the 3 rental properties also. So I took that away. But yeah, I might have a bit of a problem here.
Bob and Edna are on from Pennsylvania. They're coming in July to buy. I think I just talked to them through email yesterday, the day before.
Yeah, the Ganskis. Hey guys.
Yeah,
nice.
How's it going?
Welcome.
Hey, definitely check in on the comments. Let us know where you're watching from. It's always cool to see kind of where across the world. We've had people listening in from Philippines and overseas and all kinds of places. So
yeah,
they say Philippines sometimes.
Is that what they say?
Yeah, said they were from the Philippines.
Christy is on from Absolute Insurance Agency. You started this agency 10 years ago?
In 2014, I started the agency. Yeah, I've been selling insurance for over 26 years, so just about half my life.
Wow.
Yeah.
Christy, I was an insurance producer at one time.
Really?
I was, yeah. I only dealt with health because I helped with a national health insurance captive for ambulance services, but I'm sure you and I have been to some of the same classes. My philosophy was get through just enough to pass the test, and you actually know about this stuff.
Well, when you take the test, it really is just it's really not like the real world.
Yeah.
Especially when you're a broker, because you have to access and understand all the different policies for the different companies, and so it's like health insurance is rough though. I mean, health insurance, I don't know when you were doing that, but health insurance, you have to know prescriptions, which companies cover it, which don't. Well, it's kind of like that with the home and auto insurance. Auto is a little bit easier, but the home insurance is kind of a big deal because there's a lot of different factors, and each carrier does something different.
But what I like about what you guys do is that you're a broker, so you work with multiple. And you and I have had this conversation before. I don't care who the insurance company is. It could be Billy Bob's insurance company, as long as it's an A-rated carrier that we have a comfort level, can pay the bills when there is a claim. That is what we care about. I don't care if it's State Farm or Allstate or whatever else. So can you kind of talk a little bit about what that looks like and tell me if I'm right or wrong?
Yeah. Well, yes, a captive agent is different than a broker in the way that the captive agent actually works for that company. So they're beholden to that company. When you're a broker, you actually work for the client. So we tailor the policy. We're searching for the best carrier with the best coverage and the best rate. So there is a lot of hoop jumping because if people care about this and the company with the cheapest rate or the lowest rate doesn't cover that, we have to be able to navigate through that and educate and inform people, because a lot of the times people will want something and something's very important to them, and they'll get multiple quotes from different carriers, different from us. And then what'll happen is they'll be like, well, this one's cheaper. I'm like, well, if you send it to me, I can at least look at it and say, okay, well, you said you wanted this coverage and that's not even on there. Or their deductible is 5 times higher, which means your out of pocket is higher. But yes, we definitely want to get stable companies because obviously you don't want them going belly up in the event of a catastrophic scenario like we've had a few years ago.
How much is the I've been saying, and I'm kind of just clarifying that I've been saying something that's correct. I've been saying that we're starting to see some higher rates, and you and I just went through this week on my own personal house. When I first moved here, now obviously it was for a less valued house when I first moved, but I was paying like $1,000 a year for homeowners insurance. And last year I think I was just over $2,300, and now I'm up to like $2,500 this year.
Yes.
But I believe that this is somewhat because insurance isn't just the Charleston market for these carriers. If these carriers get hurt in Florida, or a flood in Texas, or earthquakes in California, that affects the whole country. Is that correct?
Yes, and I actually had a visual aid showing. I don't know if Mark, you want to put that one up from 2024 would be fine.
Okay.
But yeah, we've had our issues in South Carolina. But if you look at the storms that are listed on here, you look at South Carolina, we had that one tornado basically. But unfortunately, there's been a lot of other things that have gone on that haven't been catastrophic in South Carolina. But if you look at the rest of the country, especially the Midwest area, the Middle Eastern part of the country, you're going to see all those different storms that actually added up to, billions of dollars. And when they do that, they're going to spread the risk. So what these insurance companies have done in South Carolina is a lot of them have stopped writing new business. So where are they writing business then? Well, they're trying to work in the states that haven't had all the catastrophic events. So what they do is they build up the premium in those areas, so this way it can offset and they could become more competitive again. So the problem that we had in South Carolina, from what your scenario for the $1,000 when I was the happiest was when we had so many more companies writing business in South Carolina. So over the last few years, we probably had 7 companies go out of business in South Carolina, and not necessarily because of South Carolina. They could have been in Florida and Texas and Louisiana and just got pummeled. So it really isn't a South Carolina. South Carolina really hasn't had big issues. If you remember, we escaped several major hurricanes that kind of went above us or beside us. So we've actually fared very well. The bigger issue was the other states. So we had this company called Lighthouse, which I love. They had great coverage. I mean, great coverage, great rates, but they concentrated a lot of business in Louisiana, which is, I think, insane. But they had over 16,000 claims in one day.
Mm.
So they just could not handle it. They weren't spreading the risk like they should have. So they went out of business, and that was traumatic. And then another company that I wasn't really too fond of, and I didn't get the contract, but they went out of business. And in 1 month, because what happens when a company goes out of business is they tell the agent you have 25 days to rewrite every single client you have with this carrier. At the end of 25 days, the people have no coverage.
Mm-hmm.
So you can imagine what happens then. So we're rewriting all these customers and to the best rates. Well, some of these people have older roofs, they have older this, older that. It really just upset the apple cart. So what happens? All the other carriers like, oh my gosh, there's way too much business coming in at once. We don't have the manpower to go out and inspect all these homes, within a timely manner. So they don't want to take on risk that's going to be problematic. And so what they do is they just say, we're not taking on any more new business.
So these companies that are in South Carolina, and so we're seeing them, they got hit in Louisiana and Texas and Florida. So now we're seeing our rates raise here. They very well could be in Massachusetts and New Jersey, Connecticut also. So people that are coming from the north are most likely seeing their rates increase also. Is that correct?
If they have the same, if they have the same carriers, absolutely. It's that they have to spread the risk. Otherwise, there's no way they can recoup and actually do business in the state. And that's really what the major. I mean, if you were in Florida, their shrinking pool of insurance companies is unbelievable. I have two sisters that live there, and they'll send me their policy. And I'm like, well, this policy isn't replacement cost. You need to send it back to that agent or pick another agent that's going to give you a replacement cost. Yeah. Because that's a garbage policy. But the consumer doesn't know that. They're just looking at the price. And that's where having someone who actually cares about the policy is able to work with you and work through it. Like my favorite thing is when people will say to me, well, Christy, I've got this over here. Can you look at it? And then I'll be able to tell them, okay, this is what I quoted you. This is what they quoted you. Here's the difference. This way the people are empowered with information and they can make their decision for their coverage, because your home is your largest purchase. So you want to protect it adequately. There's tons of scenarios that have occurred over the last 4 years that have been. I remember on Central Avenue, there was this beautiful brick home, and this customer bought it, but they didn't buy the policy from us. They found an agency that would write a policy that just covered the loan. That's it. So their loan was $300,000. It was a 3,000 square foot house. Okay. And the house burned to the ground. I mean, the brick was still there, but the brick was basically burnt up and
just a shell.
Garbage.
Yeah. And so what this poor family had to do, and I say poor family, they had to basically pay off the loan with the $300,000, sell the lot, and that's what they got, because they had no way to rebuild their house.
Yeah,
they had to satisfy the loan first. So that's where the problem comes in, and people don't think it's ever going to happen to them. But I can tell you, there's been a lot of house fires. We had another client that just had a house fire in Westcott, and she actually called me. She's been my client. She's been my client since day one. She's really an awesome person. But so we'll go back and forth every year. She said, Christy, the dwelling went up. I don't need it this high. I said, listen, I'm not going to lower your coverage. Let's figure out a different way where we can save you money that makes sense. Well, our house just burned down, a total loss. So she calls. She's like, Christy, I'm so glad you're my agent. Because I'll argue with her every year about, not because I wanted to pay more money. I don't. Yeah. It's not. Believe me, if I can go back to when we had $1,000 premiums and all these different carriers to offer, that's my favorite. Like, I'd rather write more business and make money that way than be squeezing the death out of people.
Yeah.
So I think that more carriers are starting to open up again. So I do think that's going to start going back the other way. The replacement cost is what's killing people now because, before you'd have oh, by the way, that house, to rebuild that house would have been $535,000. That 3,000 square foot house back then.
So they were only insured for half as much as they needed to be.
Yes, and so that was the other problem. So I mean, they just they couldn't rebuild what they had anyway. If they 300,000 was over their loan. Yeah, it's just the way it is, and so it kind of flip flop. When I first moved to South Carolina in 2008, it was like the replacement costs were so low, or no, the replacement costs were higher than the loan, and then it went the opposite way. Then now it's back where it's like you have a 3,000 square foot home that you could buy for whatever you're selling it for, and the insurance comes up $850,000 for replacement cost.
Yeah, I think one thing people don't realize, and Mark, and I think you have some thoughts after this, is that when you buy a house here and you buy a spec house from a builder, and you just bought it for $400,000, it would cost you a lot more to build that same house back on that piece of property because you don't have the buying power, the skill, the expertise that that national builder has. So, Mark,
and then you also don't have the architect. You have debris removal. All of that comes in with that. So it's a big deal. So I mean, there's a lot that goes involved that people don't realize. We get customers that will say, well, I'm a builder. I can build my house, for this much. I don't need that coverage. I said, well, you're going to build it for free? Yeah. They're like, oh, that's right. I'm like, you do want to get paid. You do want to get paid. And it's not that I'm trying to be I just don't ever want to get the call that says,
I've lost everything.
I don't have enough coverage. Like I can't even rebuild my house. Like I literally lose sleep. And I mean, that may sound crazy, but I'm sure you do. You are the same way. Like when you want to make sure that the people buying their homes are thrilled with their home. That's, they're able to create all the memories, great memories and everything. So it's important to us as professionals. I've been doing this a long time. And my concern is always going to be the people. So if they don't want to do business with us, if they found a rate, and they're fine without certain coverage, they can certainly do business, but I have to at least educate them. Yeah. That's what we want at our agency. That's what we expect out of the people that work for us, to educate and inform the client.
Let me hit on a few comments real quick. Heidi and Wes are on from Connecticut. What's up, guys?
Hey guys.
They were just in town a couple weeks ago, and they'll be looking to buy soon. Lisa Silva, one of our past friends, is on. Hi, Lisa. Lisa said Selective, which is what we have, was 2,400 and not writing new business here as of January 2025. Right. Wow. BJ says the insurance industry is so heavily regulated. Do premiums go up in South Carolina when there is a disaster? When there is a disaster in another area? Yes, right.
Yeah, and that's actually what caused the major problems for us, other than the all these roof replacements that have gone on that were like a viral thing because these roofing companies were blanket soliciting new roofs. So it made it like we actually had a major hurricane when we didn't, because all of them, all around the same period of time, were getting brand new roofs, and it just. Yeah, it made a little bit of a mess, but we absolutely do pay a price. And we were discussing that insurance companies have gone out of business, not because of South Carolina, but because of like Louisiana, Florida, and Texas, where there were major catastrophic events over the last few years.
Christy, let's talk more about roofs, because that's something that we talk about with our clients a lot. And from your education, what we've been telling people is that insurance companies are starting to pay a lot more attention to roofs at 10 years old. And so, a 30-year architectural shingle in South Carolina, we're not going to see 30 years out of it. The sun beats up on us a little bit more than other places. So when you have a 30-year architectural shingle on your house, we shouldn't be expecting 30 years. We should be expecting, 18 to 20 years would be my guess of what we see. But tell me about how things have changed in the last 5 years that you started telling us as realtors, hey, start paying attention at 10. And what does that mean for somebody that's buying a resale house that is, the roof is 9 years old? And then what does that mean when they're buying a house that's 12 years old?
Well, it can make the difference between being eligible and not, really. I mean, we have carriers that'll go up to 15 years, but it does depend, and they will inspect the house. So, if you've noticed on a lot of these appraisals, they'll always say 5 years left on the roof. And people will always tell us, hey, we've got 5 years. That the inspector for the house that did these appraisals, they're telling us it said 5 years left. But they're not a roofing contractor. They're not a licensed roofing contractor. So that's really where it comes in. And I had an 11-year-old roof that when they took off the shingle, they could crack it right in half. That's not the way they're supposed to be. When they tell you you've got a 15-year roof, it's usually a 15-year warranty. Not really that they're not guaranteeing the roof lasts 15 years. Same thing with the 30-year roof. You'll see them start peeling. You'll see them curling on the bottom. Some of them will wave because they don't install them properly, so the wind will blow. You ever see them flapping? Mine was doing that. So it's just they just pulled back completely because of all the roof claims, all within that certain period of time. It would have never happened if it was just from a storm and people in a certain area had to get new roofs from a storm. It happened because these roofers were blanket soliciting homes that were 2007, 2008 built that really were at the end of their life.
Right.
And that's where the problem comes in. So yes, the insurance companies are really strict on it now. And that's why we try and let people know that, if you're buying a house with an older roof, do expect that you're going to be basically with one of two carriers, which is never really going to be the best thing. The reality is the more options you have, the better off you're going to be, right? So when you're only pigeonholed into like one or two carriers that'll take you, you're usually not going to get the best rate. Every once in a blue moon, that rate will actually be better than the other ones, but typically not going to be it. They can also drop down your coverage to actual cash value, because you realize if the roof isn't in good condition, wind tears it off, everything in the house gets destroyed. Yeah. So it's a big deal to have a very, very well built roof, put on by licensed contractors. Sometimes these licensed contractors aren't roofing licensed contractors. They'll actually just be general contractors. Well, that's not the way to do it. You really want to make sure they're licensed.
Am I correct then that saying, okay, so anything under 10 and under is fine. We really shouldn't have an issue.
Right.
From 10 to 15, they're going to pay attention to it more, and you may get coverage, but they're going to want to come out even after the coverage starts to inspect the roof, and then they would have the ability to say, no, this roof is too far gone. You need to put a new roof on, or we're not going to continue to cover you. And after 15 years, we're really going to have trouble getting insurance coverage, which, we've got a lot of houses in this market that have 17-year-old roofs on them.
Yeah, it's rough. Yes. And reality is they're going to inspect pretty much every single house now, regardless of the age of the roof, just because they want to make sure the size is correct. They want to make sure, because you go on the MLS, sometimes it'll say 1,500 square feet and you get there and it's 1,200 square feet, or, it's 1,500 square feet and it's 2,100 square feet because they didn't count something in there. So they want to make sure they're insuring it properly. They want to make sure if you've got, bay or bow windows, things like that, that's all listed and notated. And obviously the house condition, because you've seen houses that, really aren't well kept. You're not going to sell the home to people like that, but there's people that have lived in their homes that, we end up writing insurance on, and they go out there and inspect it, and they're like, this all has to be cleaned up. The eaves have to be painted. So there's a lot that they do with those inspections. And it really is protecting the homeowner, and it's also protecting the rest of our rates, because the people that aren't taking care of the maintenance, they end up causing, claims, and then the rest of us get to pay for that too. So we cover the whole Charleston market, of course. Obviously, most of what we do is in the Summerville area, but I guess this conversation would cover for both Charleston and Summerville, because we absolutely have the potential
to have hurricane force winds out here in Summerville. It doesn't happen very often, but it's possible. Talk about what the difference is between your homeowner's policy and then the difference if it were a named storm that does damage to the house. How does that work?
Okay, so that's another thing that's important when you're looking at a policy. What type of deductible do you have? And then that's your out-of-pocket cost. So we actually had a tornado last year, and it actually took a tree limb and put it right through the roof of my house. So, and that's after we spent money on cutting the trees all the way back. A neighbor's tree did that. But the deductibles are going to go like this. AOP means all other peril. Okay. In South Carolina, they're typically going to break it up into two deductibles. Even if you have a flat 1,000, it's going to say AOP and then like what's your wind and hail or what's your named storm or tropical cyclone. And so what they're saying, when you see a wind and hail deductible, what they're saying is all other perils that are covered on the policy except for wind and hail are 1,000 or 2,500. The wind and hail has its own separate deductible. So this is where it's important. When you see a percentage, like 1%, that's 1% of the dwelling coverage. So if you have a 500,000 dwelling coverage, you have a $5,000 wind and hail deductible. Mm-hmm. Okay. So if you have 2%, it's 2% of the 500,000. You have a 10,000, and that's what people don't understand. A lot of them, they look at the premium and they're like, well, it's $50 less than the other one. I'm just going to take it, and they don't realize that they just signed up for a really big out of pocket in the event of a claim. And it's fine if people are fine with it, but you at least have to be aware of it. I think. I mean, people should be telling that. We used to sell $1,000 flat deductibles all the time, and we still will when it's possible. But a lot of these carriers, another way that they're protecting themselves from, paying out large portions on certain things is they raise that deductible. Now you rarely see a flat $1,000 deductible. So, that's another reason. Like today, I just educated a client. Listen, I can move you. It's going to save you $200, but your deductible just went up $10,000. So if it's fine with you, some people are fine with that. Like that's no problem. And so I'm like, okay, as long as it's no problem for you, then, here's the rate. Very rarely does it drop it like huge amounts when it comes to the premium. But I always try and educate people on that because I don't want them to be hurt in that way. If I had a choice of saving $200 a year or keeping $8,000 in my pocket, I'm going to keep the $8,000.
Yeah.
You know what I'm saying?
Right. Hey, Mark, do you have something else to go to, or do you want? I do want to talk also about flood insurance. Are we okay to go there now?
Yeah, that's what I was just gonna kind of ask about. So flood insurance during a storm, is that required? Like, will wind and hail cover you if your house inside gets wet from the roof being off, or is that really flood insurance when it's during a storm?
Okay, so flood insurance is defined like this, okay? It is 2 or more adjacent properties or 2 acres or more that are inundated with a temporary flow of water. Okay, that's flood, period. Okay, so that's not flood if a neighbor goes and puts his hose in your yard and it goes into your house. That's not flood. It's basically like water main breaks, and now it's like flooding these houses, or like we saw what happened in North Carolina where, they let the dam out and it flooded people. The 2 totally different things. So you're talking about water damage, not flood. So water damage is, let's just say the hurricane tore off your roof and rain came pouring in. That's water damage. It's going to be covered under your policy as long as your policy is water damage. Now, 99% of the policies will have water damage, but what these companies, a lot of them have done as well, is let's say there was a water loss on that house prior to you buying it, or you had, okay, and then you said, well, we want to change companies. And I'm like, okay, well, we could shop the carrier, but these carriers are going to limit your water damage now because you had a water damage claim, and they're limited to $10,000. Well, $10,000 wouldn't really cover the rooms we're sitting in.
Right.
Because you got to redo the flooring, the walls, electric, you got to redo everything. So that's another reason why people really have to pay attention to what they got to look at the endorsements and ask questions. I know it's not exciting, but it really is important to know that stuff. But yeah, water damage is covered. It's not flood.
Okay. Lisa says we have rising water, not flood. My understanding is that it's better than flood. Please advise we have enough to cover flooring and appliances. So a rising water policy versus.
Well, I'd have
flood?
to see that.
Yeah. Okay.
Yeah, I'd have to see that. I may. Yeah, I don't want to assume what that means. It could just mean the water damage, because water damage is, like I said, if the water's coming up and it's not considered flood, it could very well be covered on your home policy. That may just be a way to make it look better than just water damage. But I'd have to actually see the endorsement to be able to tell what that actually means.
We've seen a big increase in this market since Mark and I have started doing business, in the cost of flood insurance in areas where flood insurance is required. So if you've got an AE or a high flood zone area where you buy a house and you have a mortgage, you have to have flood insurance on that house. Now, Mark and I say all the time that, we live in neighborhoods. Mark lives in Cane Bay. I live in Carnes. I choose to not have flood insurance on my house because I just don't see the scenario in Carnes where I'm going to have flooding issues. I've seen 25 inches of rain happen at a time, and all of the lakes and ponds do exactly what they're supposed to do. In flood insurance, when it's required, I had one client that went from about $2,100 a year to like $3,700 a year. So that their number really has increased. But I think if somebody chooses to have flood insurance on their house because they're concerned about it and it's not required, those numbers are typically much lower. How is that price figured out? And what have you seen some non-flood areas? What have you seen those things cost in the Cane Bays and Nexton and Carnes of the world?
Well, it's an excellent question. And what happened a few years ago was the federal government completely changed the way the ratings work. Now, they presented it like we're going to benefit the people that aren't in, high risk areas. But what ended up happening, so before it used to be blanket, like if you lived in an X zone, this is the rate you were going to pay for this coverage. It was very easy. I would just have a chart for people, send it out. If you want to buy it, I knew exactly what it would cost. Didn't matter if you were in an X zone in the mountains, you were going to pay the same as someone in the low country that was in an X zone. So what the government came and did is they said, okay, well, we're going to redo all the maps. Number one, they were doing it from satellites, getting everything, because the terrain is completely changed. A lot of building going on, a lot of concrete where there used to be dirt. So no drainage. It just changed everything. So that's when they updated a lot of these flood maps. Okay. When they did that, they said, okay, now we're going to come out with this new rating program. So before it used to be, if you're in an X zone, this is your rate. Now it's like, okay, you're in an X zone, but right next to you is an AE zone. So now we're going to rate you because the probability is greater that even though you're in an X zone, that water will come to you and flood your house as well. So that's where it came in. And so now they're rating that way. So if you're closer to an AE, you're going to pay higher than the person that is a lot further away. So it's just the way they change the rates. We have a lot of different private market carriers, and the private market carriers do a really good job. I mean, we can shop about 12 different private market carriers for people that are in the different flood zones. So, and I've also seen, flood rates go down. Not very many, but they've gone down. Some of them have gone down. So it just depends. I mean, we like to be able to give the quote so the client can make the decision like you did. I had a house in Myers Mill where, the whole other side of the neighborhood they would get water all the way up to their door, and they were in X zones. So now when I look at that map, when I do a quote, they literally will show where the AE is all around that. So those people, if they're remapped into, an X500, which is a 500-year flood, or the 100-year flood or whatever their change was, they're going to pay more now. They may still be able to elect it for themselves, but they're going to pay more. I wish I had let me see if I could find a map to show you, because I wish I would have thought of this, because I would have put that in there.
So like this, Christy, is a map. This is my house over here in Cane Bay, but there is one portion of Cane Bay here that has this AE. So I would have a different rate than these people that are right up next to this AE. Is that what you're saying?
Yeah, if you were, yes, that's the way they do it now. And I'm gonna try and get you a better. Let's see if I can find one, because it is kind of amazing when you look at if you were to punch in your address, and then you see the picture. Let's see if I can get it over here.
Well, I don't think Mark can show it off your computer anyway.
She can. She has access to it.
I actually can. Yeah, okay. I learned but I can. I'll search around, but yeah, it's changed now, so they know exactly what proximity you are to the major flood areas, and they rate it accordingly. So it is rough, but I mean, they literally have here. I think this isn't.
What would be interesting is let's have you run numbers on Mark's house and my house next week.
Okay.
And then we'll see what it would be, and we can tell people next Tuesday what it would be if we chose to have flood insurance on our personal houses, me in Carnes and Mark in Cane Bay.
Yeah, and then I can send you the picture, because the picture of the flood determination is in color. I have a ton of them, but of course I can't find one now. But it literally just shows you the proximity you are to an AE. And literally for the customer, it would help them make a decision, at least have peace of mind. There's no guarantees, obviously, because, things get crazy. I mean, in Columbia, remember when Columbia had all those water main breaks?
Yeah. Mm-hmm.
Yeah.
Okay. I mean, they were flooded, and I don't think hardly any of those people had flood policies, because they had no idea that could go on. So really, it's just a matter of knowing what could happen, and then making your best informed decision. So we don't force it on anybody. We'd like to offer it, and then they could say we don't want it, and we're fine with that. You don't want it, put it in the file, and it's done.
And that's similar to earthquake coverage here, right? Like, people think we're crazy when Jeff and I talk a little bit about earthquake coverage. Here in South Carolina, they're like, this is not California. But there is kind of a major fault that's right through here, right? And I know I got earthquake insurance from you guys just in case, but how many people do you have that are doing earthquake, and what are your thoughts on that?
Well, I have earthquake on my house. So I'm just going to say this. Even if South Carolina didn't have 5 going through it, okay? Like, people say to me, well, I'm in Goose Creek. I'm far from. Well, I just felt right now I'm in Hartwell, Georgia. Okay. And I felt the earthquake that Tennessee had the other day. Mm. I literally was standing at my kitchen and I'm like, what is shaking? I touched my countertop and it was shaking. And it was an earthquake. It was a 3.5 in Tennessee. Mm. And it rocked North Georgia and Northwest South Carolina. So Greenville felt it in those areas. So, I mean, we felt Virginia. Remember when Virginia had one a while back, and we felt Virginia. So the good thing about South Carolina is that the fault lines do let the gases go. So we have tremors all the time. You could look it up on the earthquake tracker, and there's constant earthquakes. They're little, and that's a good thing, because it's letting the pressure out. So, anything's possible, but you just want to know that you want the people to know it's a possibility, and they can make whatever decision they want for their coverage. It's not required. We don't force it down anyone's throat. And a lot of carriers won't even give you earthquake. So we actually have a standalone policy as well, that if people said, I absolutely want earthquake coverage, but the carrier that's best for them doesn't offer it, or their deductible's through the roof on it, we can offer them a lower deductible standalone policy.
Is there typically savings on bundling things together? Like, I know with me, we're just switching my homeowner's insurance over to AAA. and I already had my vehicles insured with AAA. And so I think I'm getting a discount now and saving hundreds of dollars because I'm going to have my vehicles and my home on the same company. Is that fairly typical?
Well, it's really not typical. So a lot of these carriers either write auto or write home and don't do both. Major carriers that are doing both are a lot of times real high on the home or real high on the auto, so it makes no sense to just have that. But sometimes it does. Sometimes it works out beautifully. Like last year, it wasn't the same. Last year, AAA wasn't the best on the home for you. Last year, it was a different carrier. So
Right.
that's why we do like to be able to look at it and review it and see, and we obviously want the best case scenario. So it absolutely worked out that way this time, and I'd like it to work out that way more for people where they're getting a discount if it drops their rate. So what people are worried about is one point of contact. That's really where the concern comes in. So what happens is, let's say, like what happened last year, a tree falls on your car and your house. Okay. And you have the same carrier. Now, you have the same carrier, but you're going to call the auto claims number for the auto insurance, and you're going to
Right.
call the home claim number for the home insurance. So they act like two different companies. So that's usually people's concern. They're worried about talking to one person. Well, the one person would be me. Like if you're having a problem, we don't settle claims. I'm not licensed to adjust claims. But whenever there's issue or process in place that confuses people, we want to be there to help them say, okay, well, this is the process. As a matter of fact, I have a flyer that I made up for customers because they'll the field adjuster come out and they'll say, okay, we've got everything. We're going to go back to our office and we're going to give the desk adjuster the report. So the customers think they're going to hear from the desk adjuster the next day. Well, what typically happens is there's an 8-day lag. And now you got a customer that's sitting there like, nobody's calling me from this company. I just had all this stuff happen in my house. I'm devastated. Well, the field adjuster has up to 8 days, sometimes 10, to get that report in. So what I try and tell people is make sure when that field adjuster is out there, you ask him when he's going to actually physically turn in that report, because that's when the clock starts ticking, and the desk adjuster usually gets in touch with you pretty quickly. But if they don't have the report, they have no idea even that it happened. It hasn't been assigned to anybody at the home office yet.
How
So,
many total companies do you work with?
oh my gosh, I probably have. I mean, I have managing general agencies that have home policies. I mean, probably I would say about 25, 30. But that doesn't mean they all come into play each time. You know what I'm
No,
saying?
but that my point is that what I like about what we do is, like, we switched over this year, my home insurance, is that every year you're looking at all of the different carriers to see which one makes sense. And just from dealing with you in the past, I've learned things like if the home has a wood burner, then there are specific companies that you're going to focus in on, because there's some companies that don't mind wood burners and there's some that have a seizure over it.
Yeah.
So just having the ability to look every year at all of these different companies and compare what makes sense.
Right. I mean, it's been a little bit horrifying the last few years because every company has gone up, and every company, and so it's been traumatic for the client because who wants to pay? People don't want to buy insurance to begin with. They don't want to pay for it. I understand that it's expensive, and then it just adds insult to injury. So we've been doing our best to try and get people moved to the appropriate carriers, or educating them on why right now it's best for you to stay, even though your rate is higher. Your roof needs to be replaced, and until you replace that roof, nobody's going to take you. They'll cancel you, and then you're going to be out of pocket the roof right immediately within 30 days.
That brings up a good point. Is, if you're in a house and you have a 13, 14, 15-year-old roof, and you on your own say, okay, it's time for a new roof, and you put it on, it's probably makes sense to call your broker and say, hey, I just put a brand new roof on this house, and you might do something with that.
And I'm very happy you brought that up, because yes, absolutely. People need to think about their insurance agent a lot more than they do. And I know that sounds terrible, but people buy animals. We had a client that bought a German Shepherd, didn't tell us when they bought the house. And, every time the renewal came up, Nothing was disclosed, so they didn't have the animal liability on there. And even if a lot of these carriers won't cover the German Shepherds anyway, it's in their policy form. Well, something happened where they came in, they said, we didn't tell you, but is there any way that we can get coverage on that? And obviously that's going to be a no. But if they did tell me, then I could have moved them to a company that would cover it, or we sell separate animal liability policy. So that's one reason.
What dogs should we pay attention to? What breeds?
Oh gosh, well, there's a list. So a Concorso, Shepherd, the pit bulls, of course. Poor pit bulls are just on everybody's list. Great Danes, even though they're so big and sweet, a lot of times they're so big. So if they fall on a kid, or they, people don't realize. I had a customer that told me absolutely did not want animal liability. It was $50 a year. He did not want animal liability. The dog he had wasn't going to bite anybody. I said, well, it's not, if they have teeth, they use them as a hand. I don't care. He's not going to do it. Well, they took the dog for a walk, and this was a Jack Russell. They took the dog for a walk. It got off the leash, and some lady, I don't know if she kicked at it or what, but it put a little hole in her leg with a tooth. Okay. Now the dog might have just been playing with her, but the fact remains it broke skin. And so they sued the customer, and he came in with the attorney paperwork, and he said, what can I do about this? I said, well, unfortunately, you don't have the coverage. We went over this like 3 times. I offered it to him over a couple of years, and you've always declined it. So you have no coverage. So he probably was out of pocket about $10,000 to $15,000.
We're 46 minutes in here. I got Mark and I both, I think, got some quick rapid fire questions.
Sure.
Short answers.
I'll try and do my best.
Trampolines.
No. There's very rarely companies that are going to cover them. It really
across the board, no on trampolines.
We have a company that'll do it, but like I'm saying, you literally are looking at a lot higher rate.
So pay attention to that, everybody around Summerville, because there's trampolines as far as the eye can see in these backyards. And I feel like there's a lot of people that have no coverage on when the neighbor kid gets hurt on that trampoline.
And the thing is, they don't think they're ever going to get hurt. That's the problem. I mean, nobody ever thinks it's going to happen, but yet it does happen to people. So
I was a paramedic. I can tell you from my past paramedic history, I would never have a trampoline at my house. I've been on a lot of calls.
I bet.
All right. What about swimming pools? So how is the coverage in case of a storm or something like that to replace that? But also, what if somebody gets hurt in a swimming pool?
So that's a great question. What these carriers, a lot of them will cover it under coverage B, which is your other structures. But then there's a lot of companies that want it covered under coverage A, which is your dwelling coverage. So really, you need to, if you have a pool, and you've had a policy, you still want to call the agent and say, where is this pool covered? How much is it covered for? And do I have liability specifically for the pool liability? Because a lot of these carriers have added in a separate pool liability for that specific reason. So excellent question. Always, even if you've had the policy for a while and you're like, oh, I told my agent, just call them and ask them, is the pool covered? Where is it covered and for how much?
All right. I know you already know I have a pool, but check on it later.
I've checked on it 3 times. Trust me.
All right, real quick, lightning strikes.
Okay, lightning strikes are going to be covered under the policy unless it's excluded. And I haven't seen one that doesn't cover lightning strikes. So that should be covered under your AOP deductible, your all other peril deductible, unless it's separated out, which I haven't seen. I mean, tons of policies out there. So you really have to look at the individual policy, but the ones we have and we sell, it's covered under AOP.
All right. So as a homeowner, should I go through, I don't know, once a year and video my entire house? Will that help replace things? Or what is your suggestion?
That's a better than good question. What we recommend is exactly that. Either a video or with your cell phone, or take pictures with your cell phone. And then obviously you want to put it to the cloud or some area where you're going to have it, because this is what happens. You have a fire, okay? And then you're going to be asked by the claims adjuster, what do you have? What are you missing? What's going on? And you have to make a list. Now, you're devastated. Nobody enjoys having a claim. So you're sitting here trying to figure out, oh my God, what do I have? Well, the claims adjuster is not going to keep opening the claim. Once they cut a check, they're done. they're not going to say like a year later, you look for something, you're like, oh my goodness, I totally forgot I had this, which you could obviously see happen because maybe you haven't used it in a long time. And all of a sudden you go to use it and now it's not there. So yes, you want an accurate record. And the best thing is because then it shows condition as well. Like the insurance company, they want it. They're not going to give you a hard time paying out when you have all this proof, obviously. They see the condition and like what our claim, we didn't have it. They didn't know we were agents. They had no idea. They had no idea I owned the agency, but they were like, oh, we see that you trim back the trees. We see you tried to mitigate the loss. We had zero problem. Now, if they came out and they saw trees rubbing on our roof and the yard a disaster and they probably would have treated us a little bit different because then it's like you're asking for problems.
Do you need receipts for that stuff or just videos? Okay.
Very good question. I mean, receipts, you can have receipts, but pretty much if you have a picture of a, Harman Kardon stereo unit, they'll be able to look up like, kind, and quality. So as long as you have some kind of record of it, it's very helpful to you, really, because you do want to make that list one time and feel confident in it and not so stressed out about what you may have missed. It's a big deal because it's the house that's burned to the ground. It's every single thing you've owned, and you don't want to be at the deficit on that.
Absolutely.
So great question. You guys have great questions.
When the car lights on, let's say your car catches on fire in your garage, is it the vehicle or the home coverage that is, or is the vehicle for the vehicle and the home's for the home?
Yes, it's probably going to be both because the car fire with the smoke damage and everything else. And yeah, I mean, it would be both. So, and that's with anything. So people will think, oh, well, I have my 4-wheeler, it's in the garage, so it's covered. No, it's not. The only motorized anything that's going to be covered on the home insurance is going to be a lawnmower. So that's really it. Anything else, you're going to need insurance on separately. So that's another great question. You always want to ask your agent. I mean, even if it sounds like it's being stupid, it's really not stupid because insurance is complex. So you definitely want to make sure that you're thinking correctly.
So your brokerage covers 4-wheelers, boats, golf carts, cars, boats, trailers, motors. I mean, you guys I guess the question is there anything that you guys really don't write policies for?
No, I mean, like I was saying a little earlier, they came out with these e-bikes. So it took a little bit for the insurance companies to catch up to offer e-bike insurance, just like when the golf carts went from strictly being golf carts driven on a golf course, then to licensed golf carts, then to LSVs. It took a little bit for them to catch up. A lot of them were quoted on a motorcycle policy because they realized that people needed insurance. But then, they're in the unknown. They don't know about losses. They don't know, all that. So that kind of catches up. It went from $55 for a regular golf cart policy to now, it could be $600-700 a year for a LSV. So
yeah, I think my LSV policy was under 300 for the year. But that was my next question, was for someone that doesn't have an LSV and just a golf cart. It sounds like the coverage is, $50-100 a year, not the $200-400 that I pay. The
problem is they're all required now by law to be licensed for road use. That's the problem. So, you have people driving around, and I actually wrote into the Department of Insurance on that, and a actual law enforcement person wrote me back and sent me the law. So I can send that to you guys if you want to see it, but it kind of dials it down, and pretty much it's like everybody needs golf cart insurance. And because of the fact that they're licensed for road use now in South Carolina, it kind of hurt the people that only use it for the golf course. So yeah. I haven't seen those $55 policies went to like $155 now, which is quite a difference, obviously. I mean,
sure.
Quite a difference. So, that's the problem. The more people are driving them, they get their kids on them, the kids get hurt. I mean, it's just, it's one of those things where.
Yeah, I'm using mine to go grocery shopping and to restaurants and take the kids to school sometimes.
Yeah. And it's really not most of the time, it's not going to be the golf cart driver that's the issue. It's the people that are on the road that aren't paying attention, just like when we're in cars. you know, but now you're on a golf cart that doesn't have protection, kind of like a motorcycle, except now you have more people on it. We have a carrier that won't do an umbrella on a golf cart that has a back facing seat because the people fly off of the thing, and you know, they get really hurt. So, you know, that's the things that I'm saying, like over time, things get adjusted. And if you haven't asked the question, or if you haven't said, hey, I got a golf cart now, it's got a back facing seat, you know, how can I insure that? Can I get an umbrella? You're not going to know.
So Mark, this brings up a point. If my mother-in-law were to ever come visit and go for a golf cart ride, I want to encourage her to sit in the back seat facing backward.
Just to make sure she does not put her seatbelt on. Is that what you're saying?
Without the seatbelt, like, you don't need that. It's fine.
So, Jeff, I got one for you that I've used Christy for that you probably don't know that there's insurance for. So when Riley got married, we had to have day of event insurance. And Christy get that for us in case anybody got hurt on the premise. The country club required us to have that.
You know, I do know a little something about that because Christy and I had a conversation about day of event insurance when you and I have done some special events for our clients. And so I think you thought you were going to be Mr. Smarty Pants there. I did.
Well, we also have pet insurance. We sell pet insurance. We have liquor liability insurance because sometimes when you have those events, there are people with liquor. So, you know, wedding event coverage where, you know, if there's cancellation, storms.
I think I found one you don't do. I bet I found one you don't do. Do you insure the hole-in-one for the new car on a par 3 at a charity golf event?
No.
No.
I don't even know what that is. I might have a carrier that does it.
Found one that Christy doesn't, or at least she doesn't know about.
What about vacation insurance? Do you do vacation insurance?
No, I don't do vacation insurance. That's definitely through probably travel agent.
Yeah.
And actually, Mark, I just purchased vacation insurance through AIG directly as compared to purchasing the insurance through Royal Caribbean. And it was better coverage and about $150 less when I compared apples to apples on like the flight and the medical and the out of country flights and all that stuff. I went through AIG and got a better deal.
Yeah,
that's a big deal. Yeah, it's good to have options. I mean, options are, you know, very important. When I started in insurance with Prudential Insurance when they were selling home and auto, then I worked for State Farm. I've worked for AAA directly, and I'll always love being able to give options because you can't fit a circle through a square.
Yeah.
So I don't like to have to shove them in there. So I just
Hey, Mark, I'm going to do something right now for our benefit. Christy,
yes.
Can you talk a little bit real quick about how important it is for new drivers to not get in accidents and not get speeding tickets? Because I was an idiot when I turned 16. My insurance agent sat me down. He was a close personal friend. And he said, Jeff, I know you're not going to listen to me because you're a bonehead, but it's really important that you not go out and get tickets. And then I went and got 3 tickets, but from when I was 16 to 18, and I got crushed. That does make a difference for our daughters, Mark, right?
Yeah.
So what I recommend, I have 4 kids, and all our kids have paid their own insurance since day one. And when you have skin in the game, you have a better outcome. So what we've always charged, that we actually said to them, and I know this because I've actually told clients, I've had clients bring in their kids, and they're like, we want to give our kid the 2015, this was back in like 2017, 2015 Forerunner. And I looked at them, I'm like, okay, why would you give him that with this record he has? I said, what you need to do is get this kid an older, reliable vehicle, and he needs to pay his own insurance. I said, and I looked at the kid and I said, because you don't think it's fair that your father pays $250 of his hard-earned money because you decided to drive like this. And you know what? That kid stayed with me for 3 years, and he drove perfectly. So I definitely educate the people, especially when they allow their kids. But I would definitely let them pay, if not all of it, let them pay some of it. And what we told, because our son had an accident, and I told him, I said, well, now you're going to pay for the difference in premium, not only on your car, because it hurts the whole policy.
Right.
Mm-hmm.
So his rate, what I did was I took him off the policy just for quote purposes, then put him back on, and I made him pay the difference on everybody else's stuff, including his.
I love that. So listen,
because when it
here's
hurts,
what we're willing to do. All of our clients, we are willing to put your kids, your glorious little, wonderful, beautiful children, and get them a meeting with Christy. And we'll have New York Christy come to the meeting. Nice Southern charm Christy.
No.
We'll bring New York Christy in to talk to your kids, because I'm absolutely going to have you talk to my kids.
Yeah, it really is about making sure the parents have to be saying, you're not being mean by having them pay. Okay. You're not being mean. It's part of life. Life is not easy. Life is expensive. And what we've seen oftentimes is that the kids that get a ticket and have no punishment of any kind as far as financially, they just keep doing it because, yeah, they met the cop, the parents paid the ticket, then the parents are paying insurance, and they don't skip a beat. But meanwhile, the parents are having a really hard time. And as you know, insurance is expensive. So that's what we recommend. We recommend having the kids have skin in the game. It's good for them. Our kids have never complained. So, as you know, we make them pay a set amount, and then if they have an incident, they pay more. But they've done that, and they'll do that. And then when they go on their own, they're going to be thanking God they were only paying $100 a month, because when they go on their own, they're on their own credit, because all of it's insurance scored on credit, their driving history, and they won't own a home. So they're going to get a real serious eye-opening. And that's what I tell people too. If your kid had a ticket, tell them to go shop. You have to let them shop it on their own. Have them make the call, have them disclose their activity, have them get their reports run, and have them delivered the hard facts of how much their insurance would cost if they were to go out on their own. But you have to let the kids do it.
Remember when Abigail got her license, and I said, Abigail, listen, if she drives a very noticeable vehicle, it's like there's no doubt what vehicle is Abby's in. I said, Abby, if I ever see you texting and driving, I'm going to pull you over. I'm going to take your keys from you. You're going to have to walk home, and I'm calling your dad. Are we clear?
Well, there also is these apps now where, you could get just the kids to be tracked, and it literally will send the parents a report of how they're driving.
Yeah.
So
Mark has it on me.
I don't blame him.
He does. He has Life 360. He knows where I am at all times and how fast I'm going in the car.
Yeah, but this is an app that actually it does, it's through the insurance company, and you can actually save money that way. So
Lisa,
thank you, Lisa.
Christy, Mark, and Jeff, very informative.
Appreciate that.
Lisa says, Christy, best advice for the kids and having a vested interest. Susan said, discipline is a form of love, and it teaches them accountability.
Yes, we need a lot of that back. We absolutely do, 100%. Yeah. And that's the way we run the agency. So,
Christy, we're going to let Mark wrap this up, but I just want to say thank you so much. Super informative. And I will tell you that whenever you buy a house with us, we automatically have Christy go get quotes for you on your house, so that you can feel free to go to State Farm or Nationwide or whoever you've been dealing with forever. That's absolutely fine. But we want you to have a broker involved also, because we're in this with you, and we want to get you the best education and the best price and the best coverage that makes sense for your family. So Mark and I don't benefit from that in any way. We don't get kickbacks. We don't get money from policies. We don't work that way. That's not allowed.
She hasn't even brought us cookies.
Right?
What do you mean? I get you breakfast when I go to the I get you healthy breakfast.
Christy, thank you very much. I appreciate you.
You're welcome, everybody. Have a great night. If you have any more questions, certainly let me know, and talk to you soon.
All right, everybody. So at the end of this here, we're going to throw up a video. It's got a QR code. Scan that. Do a Zoom call with us. If you want more information from Christy, email us, info@charlestonarealiving.com. We'll connect you with Christy. But scan that QR code, do a Zoom call, let us know the lifestyle you want to live, and we'll try to match you to the perfect neighborhood. Until next time, have a great one, everybody. Bye.
Bye.
See y'all.